What's up, guys? Wade here. So, welcome to another live trade example. As usual, I'm following euro dollar and I've just opened up a long position. So, I'm going to give you a quick rundown of what I'm looking to have happen here. Obviously, everything is going long on euro dollar. Had some nice trades coming up this run here on the daily and the weekly, coming up through this liquidity up here. But we've pulled back a little bit, and now I'm expecting that we're going to run the high of this current weekly candle here. And I'm hoping that this all happens realistically within this week would be great. But again, I can't control that. That's just kind of what my hopes are. So we'll have to kind of see what happens. So we've pulled back. You can see that we came down close to this institutional level right here, and that the candles have kind of held that level. And I see that we're respecting it pretty well. So what I'm expecting is that we're going to bounce from that and run the high. And the reason I'm relatively confident that we're going to run the high is because the monthly is really strong right now to the upside, and it's been consolidating for a while. This is the first real breakout on the monthly, and so I think there's definitely a good chance that we're going to run those highs. Now, will it run a lot past those highs? I don't know, and honestly, I really don't care. My trading idea is just to get up to the highs, and I'd like to reach for this institutional level right here that's painted back from this high on the close of this candle right here. So that's what I'm looking for, is to get back to that level. And if that happens from where I'm positioned right now, there will be up to that general range, about 150 pip trade, which is for a weekly range is pretty reasonable. I think that definitely could happen. So also too, if you notice, sentiment has gotten flattened out here on the 30-minute chart. So we're starting to range out. So what that tells me is that we're at more of a balancing point between buyers and sellers. And what I know is, like, right here, when the retail market started going net long right here on sentiment, that shows me that as long as these higher time frames are in, that this could be definitely a bottom point. And the reason for that is that if retail is buying right here, as you can see on the sentiment, if they're buying, then what I'm always interested in with the sentiment is what is the interest in stops. And so if retail is buying right here and there's not a lot of movement down through the transition level, which happened right here, there's not a lot of movement through there. What it tells me is that the institutions aren't using their stops as liquidity to push the market, which tells me if they don't have interest in that path of least resistance traditionally of hitting stop losses, that this could be a bottom. And if I'm looking at that in the context of the weekly direction, well, now I basically am calling the bottom on the weekly turn. So pretty cool. And so that's why I'm relatively confident. However, I have been in this situation a bunch of times, and that does not mean that they cannot come down and run these lows here once or twice, at least a couple of times. So I am prepared for that. So for risk management, how I'm doing this right now is I've bought right here with 1/2 of my total position I would get into. 1/2. Okay. I am prepared for the market to come down through this level, down through this low, and run somewhere in the range between this liquidity and this previous expansion level or value level, painted from a contraction back a ways. So what I'm trying to do is get into my second position right here in that neighborhood. If it hits, and the key by having that order there, like I want that price. Okay. So I'm going to let the market come against it, hit that price, and then get in. I'm not going to try to manage that in real time. So if I don't get that price, then I may try to add in my second position up in this neighborhood up here. We'll have to see how the framework works out. But that would be ideal if I could get my second position down here. And the reason for that, why that would be so ideal, is because I'm managing risk by this expansion line right here. I think that it's reasonable if we throw on the sync crosshairs. If you see where this expansion line is very tight with the ATS trend line on the weekly. If you look on the left chart, you can see the middle of the pink crosshairs. So right there is kind of like where I would want to be pretty careful with my risk. So I have my two stop losses right down below that right here. So you can see those right there. and that's where I would get out of the trade. So I like for stop losses and risk management, I like to put a beefy piece of framework between my idea and where I'm going to get out. And so in this case, this is my beefy piece of framework, because I know that if price goes against me, it's going to have to interact with that, and ideally it would bounce or it'd have a difficulty getting through. And even if it did get through, that would give me time to get out of this position or this position and take less of a loss. So I like that. It's like a little bit of a, like just a little bit of a barrier between me just getting immediately taken out. And so I always tell people, like, they always ask, like, how do you manage risk? Well, I look at the situation, I look at the framework that I have to deal with, which is basically what's happening right here in this zone. I look at that and I find, like, what needs to happen for my idea to play out, and then I look for framework like this expansion line that's relevant to the general range of my idea. And I think, like, if my idea is going to work out, ideally it's going to hold above that level. It's already pulled back, and so you can see it's like I'm kind of constructing a picture of what I would like to generally see happen here. But ultimately, the idea is simple. Go back up to the top of the weekly range or the previous week's range. Very simple. But I'm using this framework in here in this general area to give me my boundaries and to kind of construct my general expectations of what's going to happen. So that's what I got. I got my first half position in. I got my second half ready to go down here. We'll see if that gets tagged in. Got my risk down here below this expansion line, and I got my first take profit up here at the towards the top of this institutional level. And that's it. That's how I'm going to start the trade, and we will see what happens here, and go from there. All right, welcome back. So we are in the second day of this trade sequence that I'm working here, and quite a lot's happened overnight. So I want to walk you through what's going on here and what my thoughts are on that. So I had my first position in up here, coming into the Asian session yesterday. The reason why I ended up getting in there, I don't usually like to get in at the end of New York session, but I thought there was a chance that we could end up trending upward through Asia. It can happen, but more times than not, we get more manipulation in the market. And like I said yesterday, I was prepared for it to run the lows below down here. And you could see that it tagged in my position, which was right here. It came in and literally tagged that very, right, almost right at that level, went a tiny bit below it. And then we had a big price movement away from that. So I was glad that I was prepared for that, because that basically averaged in my second position right here. And it worked out great. So basically, when I woke up this morning, I saw we were trending up like this on the 30-minute. We were up, basically in this neighborhood, and thought, okay, well, this is good. All's working out. But then have this drop back again. So I know that we're not done with this range. So what are my thoughts now? Well, as you can see, I've added one more small position just right here. I'm in mostly at my full comfortable size between this position and the bottom position right here. So I have a great average, but because I am so close to where my idea falls apart, I felt comfortable going a little bit heavier with another small position that's all condensed right down here, just because, again, I'm very tight with my risk management. And one thing I want to take a moment to talk about that as a quick lesson. The biggest thing that kills traders is them thinking that they're always going to get the perfect entry and then going all in. If I would have went all in up here, I would not be feeling so hot right now. Okay. Like it doesn't matter who you are. If you are down or see that you potentially could lose more money than you're comfortable with, then what ends up happening is you stop looking at the framework. You stop looking at the details, and you start just feeling that you may lose money. It puts you in fight or flight. And that's not the creative space that you want to be to manage a trade ever. So I account for that. I'm definitely not perfect. I have a general idea of what I'm expecting the market to do, but I do not expect I'm going to get a perfect entry on this trade. I am defining a general range. In this case, I have this expansion range. Now I have framework right here. I have this whole area that I'm willing to average into, because I want to own that whole area. I don't want to be consolidated into one specific price level all in, because it's the whole pain and pleasure concept. If it goes a little bit above that level, I'm like, oh, I feel relief. If it goes a little bit down below that level, then I'm in pain. I want it to stop. And that's the way it is. It's for everybody. Now you could try to systemize your way out of that. You could try to dull your emotions and say, I got to trade unemotionally. Have fun with that. Okay. But at the end of the day, it sucks to lose money. Nobody likes it. So we are going to account for the unpredictable in the market. And by doing that, that's how I was able to average in, because my worst case scenario of it running those lows like the market does happened. And it happens quite a lot. So by being prepared for that, then, then you can potentially get a much better average of your own personal inventory. In this case, buy inventory for me. So I add a little bit more right here just because I'm so close to that. And at this point, I'm really looking at these lows down here to essentially hold for the most part. I'm expecting that it could run these lows still again, and I'm pretty much looking at this expansion line right here. But what I like is that these lows were put in, and then we had this big sharp move away from those lows. I really like that. So what I'm looking for is basically that this to generally hold, hopefully, or us not to get too much below that. If we get too much below that and start holding, I'm going to get on high alert, and very well may close the sequence if that's the case. But either way, I could be wrong, I could be right here. But what I do like is that my cost average is really, in my opinion, pretty high quality right now. And with this quality trade placement, I'm super happy that I got a big position down here at this low, which is the low of the day currently. I'm super happy that I got my other basically half of my total position I normally trade in at that basically bottom level. That gives me a lot of confidence to sit through the market close and feel like I'm in a good spot. I feel not feeling too much pain right now. So, and that gives me the creativity to really just focus in on what's happening and try to pay attention to the details going forward, because that's really where you want to be in tune with, is those details. So, what am I expecting to happen right now? Ideally, what would happen is that the market would creep up. It's just turned 10 a.m. my time here in Southern California. So just turned 10 a.m. The market's going to be winding up. I would love for the market to crawl up and close above this expansion line. I don't know if it'll happen, but that would be great. But right now, what I'm looking for is I'm looking to get above this line and hold. That would be a great sign that everything is starting to go in my favor and the weekly direction is kicking back in. Remember, this weekly, I'm expecting ideally before Friday close, that we will be above this high. That's what I'm looking for to happen here. So if that's the case, now I want to get above this localized framework. Remember, we're reading the story as it's written. That's what ATS and trading this way is all about. I didn't have this framework yesterday. I have it now. So now I want to climb back above this ladder rung, if you will. I want to hold on top of that, and then I want to start working my way up. And then if I could do that, then I will look to control my risk around this general range. So that's what I'm looking to have happen. Things also that I'd want to see is I want to see the sentiment flip at some point. If the weekly direction kicks back in as expected, what you're going to see is you're going to see the sentiment probably up in this neighborhood right here flip, where all retail traders start going heavy net short. That is excellent. That's what I want to see, because ultimately I want to be in opposite of the retail traders. So you could see right now they are barely going long as a whole. They're starting to go long. We can see that in the retail sentiment. But what I do know is that they're ultimately going to lose. So they may be picking this bottom right here, but the minute that we get an aggressive move, they're going to try to short against that, because they're very short-sighted in the timeframes and their expectations of the market. So they're going to short against that. I want to see that heavy shorting sentiment come into the market, and then I'll know that I'm in good shape, and then I'm going to ride it up to those highs. That's what I'm expecting. Hopefully that all works out. If it doesn't, I'm going to kill the trade here as it comes down, or if it comes down through and interacts with this line, I'll see what happens. But then I'll be watching very closely if that alternate scenario happens. Anyway, but yeah, that's what's going on, and I'll check back in here in a little bit when something is worth talking about. All right, checking in one more time here before we wrap up the day. So the price did run the low of the day right here. This is all very common stuff. A lot of times when people are trying to catch the bottom, and they're trying to micromanage a trade at these lows like that, they continually keep getting in at full size and then getting stopped out and getting stopped out and getting stopped out. And by the time you get out of a range like this, it's death by 1,000 cuts. But by being open, trading smaller position sizes, and being open to average into the range, you could get yourself a really good cost average. So market dip down below. Remember, I'm basically my ultimate out, where my idea starts to fall apart for my comfort, is going to be at this level right here. Notice that we traded down basically a little above that, and now we're turning back. So I was able to put in one more small position right here at the bottom, just because we're getting real tight with my risk out, and I still think there's a great chance that we're going to hold above that and continue on in the fulfillment of my overall idea. So just wanted to touch base on that, and just really the lesson that I want you to take away from this is that it'll push you to your limit, and that's why you need to know where the outer edges of pain are for the masses. Where the masses are in pain, people that are trying to catch this. I mean, imagine the people that tried to buy this as it moved up aggressively. Okay, imagine that. They see that, they're like, okay, the market's turning, and they jump in right about here. Okay, they feel good for a second, and then look at it, just puts them in pain. It holds, goes sideways, and then runs. A lot of them are giving up right here, because if you bought right here, your pain threshold's going to be below these lows. That's where you're definitely going to not feel great about that decision. So when you study where people have made decisions, where they were enticed to jump in, and then you look around that area for where are those people going to feel uncomfortable, you start to be able to dial in highs and lows and where liquidity is going to be. And that's the whole game. The whole game is accumulating discounted liquidity and distributing it for a profit. That's it. That's the entire game. So having a systemized way to think about that and do that is what we're here to do, and that's what I'm trying to teach you. So anyway, one other thing I wanted to talk about that's worth noting is that looking at the daily chart right here, normally I favor the daily, okay? I like trading just in the daily trend. However, I do catch some pretty big moves off of weekly points of interest. So for me personally, I've been doing this a long time. I can kind of go back and forth between the daily and the weekly. But by default, I like to follow the daily direction. That's my most preferred way to go about trading. So, but what I want to tell you about is that some people will do this same thing. They'll trade like a 5-minute to a 4-hour, and then they'll see the daily or the weekly at a point of resistance or something, and then all of a sudden they're trading off of that instead of following the 4-hour. So here's one of the things I wanted to quickly point out is that yes, my trade is based off of the weekly, basically holding above ATS trend and trading back up to here. Now think about that. That is a weekly timescale trade. So this could take 7 days, 6-7 days plus, maybe even into next week to actually fulfill, right? That's my time expectation. But notice that today, here, let me go back. A lot of people would be thinking like, oh, the weekly's coming up to this support area, whatever they're using for their technical analysis. Like, I'm going to get in. And normally they trade a 5-minute chart. But now guess what? They're in a weekly based trade. That can cause problems because they're looking at a 5-minute chart, which will fluctuate a lot in a week's time, to try to micromanage their entries. And that's where, again, they get death by 1,000 cuts. This is a weekly timescale trade. I'm expecting this could be a week and a half. I could be in this. Hopefully it's shorter, but this could be a while, okay? But I'm prepared for that. And notice that the daily, while I'm waiting for this weekly to come around, notice that the daily is holding me out of the money for now a whole day, basically. The daily is trending against me. But as long as the weekly direction stays intact, this movement right here, this is all short lived. It's not a matter of if, it's a matter of when will it come around and go back in the direction of the weekly. So my point is, a lot of people misjudge how long they're going to have to be in trades. They look at a 5 minute, but see a resistance on a daily time frame, and then they get in on the 5 minute chart, and then they're watching the 5 minute chart. That chart's going to be irrelevant to the time scale that you just base your trade off of. If it's a daily support, it could take 1, 2, 3 days to turn, sometimes more. So keep that in mind, that while I'm waiting for this weekly idea to play out, I'm having days potentially that are going to go against me. Okay. I'm hoping it won't be too much, but notice that there was opportunities in the daily direction to short here. These are short opportunities right here above this expansion line where we had minor framework at that point, down to expansion, 21 pips, down through, again above expansion, down through, there's another 37 pips. So the daily direction is paying on the short side, but the weekly, longer time scale, the bigger move I think is to the upside, and that's what I'm waiting for. So know the time frames that you are using and judge your entries and how long you potentially could be out of the money based off of the real time scale of that trade, because typically the bounces that you're looking for are not going to happen immediately. All right, so I'm checking back in on this trade one more time before I head off to bed. It is 10:14 p.m. Right now here in Southern California, and so I'm about to getting ready to go to bed. But there's been a few things that have transpired here. I just want to briefly talk through real quick and give you my thoughts on it. So the market has traded now up above this expansion line, which I told you before. This is where I'm trying to control risk as best I can above this line. So hopefully I'm in home free territory now. But the market can still range out between this line here, and also notice that we have a new expansion line right here as well. So the banks, the market makers will do whatever they can to harvest liquidity. They may have gotten everything they've needed off of this move down right here and then this move down right here, but they could still run stops down into this area as well. So if that's the case, I don't want to be stop hunted right there. So that's why I'm not moving my stops up into this neighborhood. And also, too, because I do need to go to sleep. I'm not just going to stay awake all night. So for to give this the room that it needs, I really got to kind of leave my stops out of this general area. Now, it may not even go there. It may just continue to keep running up, which would be great. That's ideal. But in reality, just for my situation, what I got to do right now, that's the call I'm making. Might not be the perfect call, might not be the best one, but it's a decision. So that's what I'm going to make. So what I'd like to see happen, what I'd like to wake up to, is I would like to see this daily candle right here above the last daily high. That's what I'd like to see, and I'd like to see that it's strongly above it. That's what I'd like to wake up to tomorrow. Will that happen? I have no idea. But that would show that my trade is making really good progress and that my idea is well intact. And if we get up strongly through the high of that candle there, then next stop is ATS trend. And then, hopefully we'll we'll start making our way up from there. And then I should have plenty of framework here to protect my break-even cost and be totally fine. So I'm actually in the money now. I'm in profit on these 3 positions down here. My break even on these is about right here, just to give you some reference. So basically on the expansion line is where I'm at. I'm at $0 P&L. So, which is nice because that's a really solid piece of framework right there to go off of. So by the time I get above here, I'm going to be well in the money and headed to these targets up here and just watching the progression. So that's the whole thing with navigating these entries is I'm just trying to get enough in the money so that I'm out of the pain phase, and then I can use my skills and my intuition and my interpretation of market framework to try to read it as things pan out to keep me in the market. So anyway, that's it. That's what I'm choosing to do. I move my stop losses right here. So hopefully I don't wake up to those hit, but if I do, oh well, that's what happens. We'll move on, find another trade. If it does what I said and comes up through the high of this last daily candle, it's going to be a great sign. And that's going to give me all kinds of options as far as how I'm going to ride this trade. So we'll see what happens. We'll check back in the morning. All right, welcome back. Checking in on this trade, and everything is going rather well. It is Wednesday morning. It is 8:38 a.m. right now as we speak. And I couldn't be happier. Everything is working out really well, and there's no surprises here. So, as I said last night, I was expecting hopefully that the daily would break the last daily high. We did, and I said next stop will be ATS trend. So we've come up and hit that. And so, yeah, we're pretty much in that zone that I wanted to be in. And everything's working out great. There's literally no surprises here. It's done pretty much what I thought it would do. Starting with, remember I said yesterday that, a lot of people would be tempted to start protecting their profit real tight up here. And I remember I told you, I've been doing this a long time, and the banks will do whatever they can or they want to do to accumulate more inventory. So you can see what they did right here. There's actually a master pattern cycle inside these candles, if you can see it. Even though we don't have a box right here, you can identify master pattern activity by the swing high, swing low points in the expansion legs. So you can see right here, it's swing high, swing low, swing high, swing low, swing high. So even though we don't have a box of origination, there is still master pattern activity for sure happening in there, and we could see that in the legs. So, and a lot of people, they obsess about the boxes and the this and that. The boxes is one thing. When you get the market contracting, yes, that is a warning, but it really comes down to the expansion legs too. If you have a good contraction box, that's noteworthy. But if you have expansion legs next to that, then that's really kind of what seals the deal in, where you have the box and then you have the first and second expansion leg. Right here, I don't have a box, but I do have expansion activity. And this is where algorithmically it's hard to get this perfect. So when we talk about like ATS software, it's hard to algorithmically get something where a box will show up at every single exact perfect point that it needs to. But as you train yourself on this methodology, the software does absolutely help. But I've been doing this so long, I could just look at these candles and I could tell you that there's a reference point inside here, even though I don't have a box, just because I have clean expansion activity. I could see it. So the fact that I had that master pattern expansion activity shows me, even though I don't have a box right there, I still can see that there's a reference point in here I need to pay attention to, and also notice that it pretty much aligns well with an existing expansion line. So I don't need to draw a box in there. I don't need to mark it. I'm just going to go off of this existing framework that's already there supporting that move. So everything's working out good. We came up through these liquidity lines that are right here, kind of blasted through those. So also came up and hit this expansion line almost to the pip right here at the top. So it's no surprise you're getting a little bit of a pullback here. My ideal situation that I would like to see on this is that we would close the day up above this high and with some strength. That would be really good. But I don't know for sure if that's going to happen. All I know is that we're making good progress, but things could still breathe back. Another thing that's noteworthy that I do want to mention is that the fact that, remember yesterday I was talking about I need to leave my stops down here. I had them down here at the low. I had them down here at this low point right here. And remember I said that even though, it's crawling up, we were above this expansion line. Remember I said I need to give it room because the banks, their accumulation tactics have no end. I mean, they'll do whatever they need to make more money. So you see how this expansion activity reached down into this zone down here. And I expected that, just like I was accounting for this reach down that happened right here when I first started this trade. It's what they do. And a lot of people don't account for that. That's why, I'll break my overall trades into smaller positions because I never call the entry perfect. I mean, it's very rarely that, maybe I'll get 1 out of 10 that I get pretty dang good. But other than that, I don't call it perfectly. I have general zones. And when I get in those zones, I like to accumulate just like the banks do. They're not waiting for the right moment to throw on their $1 billion position. They are buying in a range and then they're selling out in a range. So I'm trying to always mirror what they're doing because it also gives me much more flexibility. If I'm all in at one price then that pain and pleasure threshold is very, very sensitive. I can't help it. No one can. Okay? By doing it this way, by accumulating into an average of positions, then you have a much, much, much better chance of getting in the money. And you can see that's what's happening right now. So, so I would like to see this day close for sure above this last daily high. That would be ideal. And I'm really looking to not trade much back into the previous day. I would like to see the day hold up here, and then on our next opening day here later this afternoon, during that day, I would like to see just nice progressive movement up through the ATS trend line. That would be ideal. I don't know if it'll happen, but so far, now that I'm in the money on all my positions, I have more options. What's key now is to still pay attention to the details, because remember, when you're in pain, you want to just get out of the market. Now I'm feeling pretty good. So what do I need to watch out for? I need to watch out for being complacent. I need to watch out for not really caring. I need to watch the details, because as much as I would love to have this work out, it can go against me. So now is not the time to walk away, and start popping bottles of champagne. It does not matter yet. You still need to watch the details and be aware that even though you feel good, it could go away very quickly. So we got to read the market still. Job's not over. Anyway, that's it. We'll check back in later if there's anything noteworthy to talk about. Other than that, everything's progressing well. Another thing I wanted to briefly touch on real quick too, just checking back in here, was the retail sentiment. You can see things are just kind of settling up here for the moment, but notice that the retail traders are starting to go net short, and you can see that it's starting to get pretty aggressive. That's exactly what I want to see on the retail sentiment. You could also see that we had the shift in here in these levels coming up through here. That's where the sentiment shifted back. So the fact that retail is starting to heavily go net short shows me that I'm on the right track. So that's another thing for sure that's worth paying attention to. All right, welcome back. It is Thursday, September 5th. It is 9:50 a.m. here in Southern California. And just checking back in on this trade, and boy, did it get wild today. I feel sorry for your day traders, your short-term scalpers, man, because Euro-dollar was tough trading today for you guys. So everything on my trade's progressing nicely. Well in the money on all my positions. Daily is starting to come through ATS trend. I'm suspecting that we're going to get a trend confirmation on ATS trend here at the close of today, providing nothing wild happens to the downside. But yeah, everything is going good. But I just want to take a moment to talk about this mess right here. I'm on the 5-minute chart because the 5-minute's really popular among day traders, scalpers, trying to find those short-term moves. And I think there's an opportunity for a good lesson right here. If you see right here, this fair market value was established right here. We have this box right here. It came up and then came down through the bottom of the box. We got a fair market value line at that point because it confirmed that it was basically a box that we want to pay more attention to based off the expansion activity. But basically inside here, we had news. And a lot of people get lost in trying to predict, like, what's the fundamental, what's the number going to be, and how's that going to fundamentally affect the currency or whatever it is, just in general, right? And the way that we look at news is it's energy. It's energy coming into the market. And that energy is going to have opinions. And it may be opinions based off of the news. It may be opinions based off of technical analysis, highs, lows, whatever. But at the end of the day, it's people that are willing to transact. They are willing to open positions, and they're going to be willing to close those positions if they don't go for them. So that's energy in the market, willing participants. And so what ends up happening is that people bring their opinions to the market. They bring what they think is going to happen. They look at the number as it's announced. What does that mean? Is it already baked into the market? Is it not? Is it surprising? And they try to figure out what's going to happen. And at the end of the day, you know what happens? They may get in based off of a fundamental opinion, but you know what? They're going to get out based on pain. They're going to get out based on it not going for them. So the moment someone executes a trade for fundamental reasons, guess what they do? They go, and they immediately start looking at the architecture of the market, whether they're looking at ATS or not. They're looking at highs, they're looking at previous lows, they're looking at market structure, changes of character, all this stuff. Let me put my indicators on there. And they're looking at technicals to confirm
whether or not their fundamental opinion is working out or not. And that's great because what we follow is the pain threshold of the masses. That's what creates these charts. That's what we're interested in, because where the pain is where the discounted liquidity is. And that's what we're interested in, because those are the best entries. So news hit this market today on the 5-minute chart. And what do we say? News is energy. What does news do to the master pattern? It just speeds it up. That's all it does. It doesn't change it, just speeds it up, makes it go fast. So right here, we can see we have box breakout, swing high 1, swing low 2, 3, 4. Now we're down on this fourth leg. We've come back up through fair market value, and everyone's wondering what's going to happen here. Well, I would not be surprised. I don't know if it's going to happen for sure if we don't come and run liquidity above the high. Why would that be? Because that's the swing high of the predominant cycle right here. There's liquidity above there. A lot of people have tried to go long here. They've tried to short here. Now they're trying to go long here. And there's just a lot of mixed opinions happening. And traders are trying to chase the market around right now. So, but if we step back, we look at the neutral point. Here's the neutral point before all this news hit. We look at the structure of the master pattern, the really only the structure that matters. We see that we're above value now. The next logical thing that would happen potentially is us to attack the liquidity above the high. So we'll see if that actually happens or not. It doesn't have to, it's not guaranteed. But based off of the overall trend of the daily, the higher time frames, the 4-hour, everything's long right now on the 4-hour and the daily. There's a good probability we're going to attack the liquidity above this high up here. So anyway, I just thought that was a good opportunity for a lesson to show you that, number one, what we do works. The understanding that we are talking about here constantly is, in my opinion, the most sound understanding of the market. It gives rhyme and reason to this mess. There's a lot of day traders that have probably been stacking small gains up until this point. We've had some decent trending markets, and they've been taking 5 pips here, 10 pips here, 15 pips here. And they're doing, they're trading well. And then one day like today, where it just blows aggressively through highs and lows, reversals all day long, one day like today will demolish 3 months of a day trader's progress. Whereas with what I'm doing, and this is why I try to push people towards the higher time frames, I'm coasting right through this because I have my eye on the prize of the daily, weekly trends. This is just, it's rough waters, but it does not change the outcome I'm expecting. Doesn't change it at all. And so while you could look at this, you're like, but like, look how much money could have been made in here. Like here's 25 pips and, here's another 18. And they start measuring all the ups and downs. They're like, but that's what I need to do. That's what I need to do to be successful. At the end of the day, you might really navigate one of these days well, just buying the tops and the bottoms and do really well. But most people over time are going to get crushed on a day like today. Crushed so bad that it's unrecoverable. Whereas when you're trading the higher time frames, I'm going to sail through the rough waters because my ship is much more stable. It's based on a much higher time frame. It's in line with how the banks move their money. I'm going to see the market go through this stuff. And while they're trying to scramble to grab 10, 15 pip trades desperately, I'm going to knock down 50, 100 pip trades, no problem through this. And yeah, maybe I missed all the ups and downs, but those are really hard to get anyway. So are you actually able to get them? Can you take them home? Can you put them in the bank? So I thought this was a great lesson because this is really what holds a lot of traders back is their inability to let this stuff go. And I know why. Believe me, I was the foremost offender before I had so much pain that I had no choice to stop doing it. Okay, so I speak to you from pain and my own understanding. But if you are willing to let this stuff go and go with the higher time frame directions, days like today that would crush most people, you'll sail right through them. And at the end of the day or end of the week, end of the month, end of the year, end of 5 years, end of 10 years, end of 20 years, you can say that you actually made progress. And that's what I want for you guys. I want you to give up the I gotta be a day trader narrative to be cool like all the cool guys on YouTube and just make progress. Progress is in the higher time frames because it's simple. It's simple It's slow enough that you can make decisions and you can follow the big moves in the market. That's what the banks do. It's what you should be doing too. So, anyway, don't want to preach anymore on that. Other than that, my trade's going well. I'm up through ATS trend. I would like to hang above here. I want to see how the day closes out. If we close out above the high liquidity right here, then I'm going to be in real good shape and be totally happy with that. So pull up the 30-minute chart here. And notice also sentiment, retail's coming in hard. Overall, the across timeframes, retail's of course shorting against this, which is a great sign, means that it's likely to keep going up. And yeah, that's no surprises here. Totally textbook. So that's it. We'll see how the day closes, and I will update you if there's anything noteworthy to talk about. All right, welcome back. So we're checking back in on this trade, and we have a new day started here, and we have a new directional change on ATS trend. So that's all good. And you can see that we have basically closed, or opened this day way above the last ATS trend line. We pretty much gapped up through that really well. So I'm liking all of that. Everything's looking really good. And you can see that this new day is opening very close to the top of our last day. So that shows strength in the market. Of course, it's not a guarantee that it's not going to reverse on me, but everything is progressing really well. So what am I looking at right now? A few reference points for where we're at right now until I get some more framework, a new box, new something to work with in this area. I'm going to reference this liquidity line right here. So if you see where this liquidity line is going over, get my crosshairs out here. So if we highlight that liquidity line level, what I'm hoping is that the banks are using that liquidity level to boost the market rather than accumulate to go the other way and distribute into a short market. If that's the case, then eventually they should be holding above this level. And that's what I would generally like to see. So I'm looking at this level as a pivot point right now to see how they're going to manage manage around that point essentially. So if they hold above that, that's going to be a great sign. And I would like to see here in the next day that we work our way back up to this line up here, which is, let me put on my sync crosshairs. If we look at where that is on the daily, that's getting close to the origination point of the last daily trend change, which is right here. So I think that's definitely reasonable to hit that. Now, tomorrow is Friday. I don't know if we're going to be able to hit my profit target by the end of the week here. I would love to, but we would need some pretty monster movement. It might happen. It might. But I don't know. And we'll see, because if it does go up, I might close out on Friday and not hold over the weekend. I'm just going to have to see. I'm going to have to see how I feel. But basically from right here to where my general profit targets are, we're looking at like 115, 120 pip move to get up to there, which is not totally unreasonable. Some of the biggest moves in euro dollar, that's like the high end of the scale. Usually like a small range day is going to be like 30 to 50 pips. And a trending day is going to be around 75 to 90 pips, somewhere in there. A big trending day usually goes like 120, 130. So if we get a big trending day tomorrow, I could hit that level. But I'm not totally sure if that's going to happen. We do have some news coming out tomorrow, but we'll just have to see. So anyway, that's pretty much it. That's my plan. Risk management is going to be around that pivot point there, and I'm just going to be watching that coming into the Asian session and see what happens. I'm not going to move my stops. I got them right here, locking in a little bit of profit if it did go against me. But until I get like up in this neighborhood, I'm not going to feel real comfortable to lock in a significant amount of profit. So we'll just have to see how it goes. But anyway, I will check back in if there's anything noteworthy to talk about. All right, welcome back. So I have closed out my trade sequence, and yeah, it didn't go as well as I would have liked it to go. Obviously, I would like to reach my overall profit target, but it wasn't terrible. So let me talk you through kind of what I was thinking and kind of go through it. So you can see I closed out all my positions right here, and that was due to the news and a few things that had transpired in there. So basically, let me open this up a little bit.
So we had some high volume news come out right here, and my stop losses at that point were down about right here. That's where my stop losses were on everything. So we had this spike down, and you can see that this spike down on this candle came and held this previous expansion line right here. And so that's what I like to tell people is like when you have your stop losses, you want to have levels of framework in between where you are, where price is, and where your stop loss is, because then those are potential reaction points. So that when that news came out, it spiked down, hit that exactly basically, and then spiked up. And I saw a pretty good profit on here. But as you know, my overall trading idea, I had a higher profit target in mind. So I was hoping, like anyone else would, that this would continue to move up and keep going, but unfortunately, it didn't. And I have no control over what it does or doesn't do. But that was it. It pretty much it went up to the peak, and I was like, all right, this is going to be it, and then came back in and continued ranging in here. So what I want to touch on real quick, if you notice that there's this box right here. As we traded down, we came to this last expansion line, and then the news came out, it blew up all the way to up here. That created a master pattern origination point right here. Okay. And so that gave me my expansion line, which is my fair market value right here. So here's what I was thinking, because you notice I have this little box right here. I close out all my other trades in good profit, except this little one right here. So what was this all about? So right up here, as the market was pulling back, my thoughts were that if this is going to continue to be a runner, it'll just pull back to fair market value and then potentially keep going up from there. So I put in a very small position, smaller than my other smaller ones I put on before, if you watch earlier in the video, just to get engaged with the market. And this is kind of a principle that I teach with people. Sometimes to connect with a certain market range or anything, sometimes it's good just to get a little bit of skin in the game in that range. And so that's what I did. I was watching this when the news hit, 5:30 my time here, 5:30 a.m. And I saw it spike up, and then it started to pull back. And I thought, I need to up my engagement right now. So I put in a very small position right there. And just again, it just kind of brought me into the moment right there in that range. So obviously, too, one of the things that I want to say about that is that all my other positions were in the money. Well, like this was not a terrible trade. So you would say like, well, why weren't you buying that under fair market value? And I'm not opposed to trading above value, particularly when you're close with the value line like that. I'm not opposed to doing that if you have a bunch of trades, or at least one trade that are all in the money that are financing the risk. Because if you are suspecting that you're going into the trend phase and the market's going to take off from a value point, it a lot of times will pull back and go to value, and then it'll retrace back to there and then go into the trend phase and keep going. So that's what it was. And I wasn't worried about it because I had all these other positions that were in the money. So obviously that didn't work out. It crawled down. It kind of reacted off value a little bit, and then it started to come down. And then why I closed it right here is because my stops were down here. It was basically down here. And I didn't want to give any more back past that level. And what I thought about right here, and I actually was late on this. This was not great of me. Right about when we got through value, I thought, okay, it's not bouncing. Me being imperfect as I am, thought, oh, just give me another minute. Then I said, let me let it trade down into these candles right here. See if we bounce off those and we get a quick move back up. No, still not going. Then I thought, you know what? I'm not ready to see us come through the swing low point, which at this, you'll notice that the swing high of this cycle and the swing low is on the same candle, that news candle. So I thought, okay, look, if we get through value, that's a swing low liquidity down there. We had a liquidity line down there as well. Like, I don't want to go down there. Yeah, we might just barely breach it and then turn off of there. But at this point, I'm not willing to give back, because this very well right here, what you see, could have been a big reversal, and it would have came down and just taken away all my profit. And I wasn't willing to go there based off of where I had been. So just a choice I made. It got out. Yes, it did end up breaking the swing low liquidity later on. Then we had this rebound move up, and then you can see now we're still down a little bit. This move happened very fast, so would have been hard to get out on this tip. it put you in the money and took you out very quick. So I would have probably, even if I held through this, ended up getting out about the same spot anyway. So, um, but that was it. All in all, it was a very profitable trade. So I'm totally happy. I was in at my full size with the two main positions. The other ones were just kind of, a little bit of gravy on top. But my two big positions were this one right here and this one down here. So those, as you can see, were great. Both those were in the money, particularly this one. This is the most profitable out of all of them. But every single thing got in the money except this little test one up here. So total is 173 pips roughly. So not terrible. The majority of that was at my biggest position. So I'm totally happy with that. So what am I thinking now going forward? That's key here. Do I still think that the weekly is going to head up and trade to the tops of these? I definitely think it still can. You can see it's still holding this institutional level here, still holding ATS trend. We just had some news come out, and the market, I like to say it, the market makers and the banks, they like to shuffle the deck. Every time you think that you know the next card, they shuffle it. And this is them shuffling the deck. So never, ever underestimate what they are willing to do to throw people off. Now, it may be a reversal. We may be going short now. We may start to see yellow on the weekly opening into next week. What I'm looking at right now, which is interesting, is that we are in the grade A pocket on the daily. You see right here that we had a new ATS trend direction, so it's showing that we had an inefficiency confirmed by the separation of this candle to this candle right here. And we could see that inefficiency shown, marking that first instance level right there with that dot. And we're trading on top of it right now. So what that means is potentially, I don't know if it'll happen today or not, but this would be a sweet spot to potentially enter a new trading sequence. Anyway, that's it. That was that's the that's the full trade. That's what I was thinking. As you can see, I'm definitely not perfect. Like anybody right here, I'm in a little bit of a pleasure zone. Who wouldn't be, right? When that market spiked out, I was super psyched that staying under this level of framework right here with my stop loss, that barrier protected my stop loss. So that was awesome. And then I was way up like a few minutes later, and on my way to my ultimate profit target, which was above these highs up here. But look at it. I mean, that's how fast it could reverse on you. You could imagine the people now. Just a little side point right here. We're always trading based off fair market value. So even doing the basic strategy, we're long on the daily, trading under value as market comes under value, and we say you want to get up to value. You can see how those were stronger positions, even up to this last box right here. Even this one right here, here's fair market value. The market traded below fair market value, right back up. Below value, back up. We're below value again. It's probably going to go back up. So that's our basic strategy at work right there. So it just, you can imagine like the traders that were chasing this news today. There was traders that sold right here as it came down. They probably literally got filled at the bottom of this candle and then immediately were whipped out of the money, got stopped out probably up here, and then went long basically at the top of this, got stopped out again, went short again, got stopped out, went long again, and then now they're short. Like that is what retail traders do. They lose their mind, particularly day traders, and in a situation like this can get completely beat to death. They'll lose their entire account in a day like today. Whereas us holding a directional bias, even if you're just working the basic strategy and you weren't already in a trade previously like I was, staying at least undervalued. You can see just like it is here, staying undervalued, you see how much kinder the market was to you, at least putting you into the money back up to value. That's what it's all about at the end of the day. It's about controlling your risk and putting probabilities in your favor. And when you trade above or below value opposite like that, particularly in trend, you are literally doing the opposite of the dumb money. The dumb money is buying the breakouts. They're getting smashed every which way. You're literally trading with them. That's what makes this profitable. That's what makes it work, because you're doing the opposite of what the dumb money does in chasing everything that moves. So anyway, I think there was great lessons in here. Hopefully this was helpful, and glad I walked away with a winner. And we'll see what's in for next week, see if there's any opportunities. I'll just keep doing my thing, but hopefully this was helpful to you.